All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Tuesday, everybody. Happy April Fool's Day. Today is April 1st, 2025, and I guess we have to throw out that warning. Disregard pretty much everything you hear on Twitter today, or at least, maintain a grain of salt. Every April 1st, I get messages from people like, did you see this story? It's fake. Note the date on the article. So that's out there. So here's a bunch of news that is not fake today. All right. There are no April Fool's jokes in my stream this morning. So the automakers this morning have been thrown into chaos worldwide. There is a big change happening in the auto industry. Of course, tariffs is playing a big role in it. Like for the next couple of days, guys, you're just going to be like hearing tariffs across the board. There's no avoiding it. It's the biggest story in finance at the moment. So let's talk about what's happening in the automakers. First things first, your Asian automakers, particularly in Japan and in Korea, are getting slammed right now. Names like Toyota, Nissan, Honda, Hyundai, down double digits over the last couple of days. They're being sold off hard. Look, a 25% tariff on their vehicles. Think about what that means. Think about how much a new car costs. And then add 25% on top of that. $80,000 cars going to $100,000. Nobody's going to buy these things. They just can't afford to buy them right now. And, I had my buddy Tommy on the channel last week from Car Concierge Plus. We were talking about this. Guys, cars are getting more expensive. I understand the affordability situation, but look, they'll figure out a way to do it. They'll figure out a way to jack up the financing that's available. They'll package it up into securities and they'll sell it to your pensions, even though they know people probably aren't going to pay these loans. They're going to find out a way to do this. These cars are going up in value, even though people already can't afford them, and delinquencies are already at all-time highs. It's going to keep happening. So the Asian automakers, those Chinese, I'm sorry, not Chinese, those Japanese and Korean names, they are just getting absolutely clobbered. Meanwhile, we've got BYD, the Chinese automaker. They are just doing phenomenal. BYD out this morning, they're saying they're going to deliver 371,000 vehicles for the month of March. A little less than half of those are EVs. The other half are hybrids. BYD is gobbling up market share, particularly in China, but not just in China, in other markets as well. This is something new. Chinese automakers selling cars around the world. That's not a story anybody's really ever heard before. They're a new player. All kinds of protectionist policies going into place, obviously, in the U.S. starting tomorrow. But in Europe, a few months ago, they put tariffs on these BYD vehicles because Western automakers can't seem to compete. They're kind of crap cars, like when it comes to quality and things like that. Like I don't hear very good things about the vehicles, but the price tag is so much lower. And look, we just got done talking about $100,000 vehicles after tariffs here in the States. You know what? I'll drive a piece of crap if it comes with a piece of crap price tag on it, because I don't have six figures to go throw at a car right now. Like, the average person doesn't have six figures for a freaking vehicle. So these BYD cars are just surging here. Meanwhile, Tesla, the problems at Tesla. This morning, France, sales in France down 37% for the month of March. That's after falling 26% for the month of February. Do you see a pattern here? People don't want to buy Teslas. Look, you guys know where my politics are. I kind of sit towards the middle, probably more, definitely more right of center, but not far right. But let's face facts here, guys. A lot of people really don't like Mr. Elon's politics, and they're not going to buy his cars. And they're the people who have been buying his cars for the last 15 years. They ain't going to buy them anymore. They'd rather burn them, literally, like throw Molotov cocktails on them, largely peaceful Molotov cocktails. Somebody posted on Twitter yesterday, the coexist people are blowing things up again. But let's face facts. We've been talking about this for days. Tesla stock has a deep and painful reckoning that's coming. This thing is valued more than Ford, GM, Stellantis combined. It's at one point. It's down pretty big so far this year. But it's going to keep falling here. The numbers coming out of France and Sweden this morning suggest that the decline in Tesla sales wasn't a one-off. It's accelerating to the downside as it goes. So Look, all these three stories combined, Asian car makers getting clobbered, Chinese car makers gobbling up market share, Tesla in free fall. The world of automakers is a freaking mess. Just be careful, anybody who's playing in those names. Now, look, we had another story that was queued up. You guys may have noticed the title shifted for you guys who clicked early this morning. We had my moderator, Mish, caught something at the last minute. He saved the show. We had to call in a little bit of an audible this morning. Yesterday, there was some crazy news in the gold market. And again, this is not like an April 1st thing, but it appeared yesterday that there was a massive spike in the open interest for gold contracts, in particular for the April delivery gold contracts. About $14 billion worth of gold. Suddenly, people bought contracts worth $14 billion. On the last day before April delivery, 45,420 contracts had been added. And this is unheard of. This just does not happen. Orders like this at the last minute. It looked like somebody was standing for delivery of a huge amount of gold. A lot of people were very skeptical about that. The gold bugs were freaking out. I was freaking out. I was trying not to get too excited about it because of kind of like we've been here before and then it fizzled out and nothing ever happened. Well, it looks like that data was a misprint. Shout out to TF Metals on Twitter who spotted. I'll show you guys in a couple of minutes the actual tweet itself, but it looks like there was a big downward revision right a day later this morning. The data came out. And so it looks like most of that surge in gold contracts just went up in smoke this morning. So that's why the change in title this morning. And again, shout out to my moderator, Mish, who caught that one. Thank you for saving the show, brother. Also going on this morning, OpenAI is now worth $300 billion. How? I don't know. It doesn't make any sense to me. But OpenAI has just closed a funding round worth $40 billion, valuing the company at $300 billion, $30 billion of which is coming from SoftBank. Then you remember SoftBank, we were talking about them just a few days ago because SoftBank is going to invest $1 trillion in technology parks here in the United States. And I, raise a question. Does SoftBank even have $1 trillion? No, they don't. Nobody really seemed to care about that. Everybody was just like, buy stocks on the headline. Well, here's another 30 billion. I mean, if you're already just making up $1 trillion numbers of money that you don't have, what's another 30 billion on top of that? So SoftBank is leading this funding round. Fun fact, OpenAI now worth more than Chevron. OpenAI lost $5 billion last year on $3.7 billion of revenue. Understand that for a second, all right? That company, their losses was almost double their revenue. Not only are these guys not profitable, these guys are nowhere near profitable. They're not getting closer to profitability. They're getting further from profitability, and yet their valuation keeps going up. Why? Because SoftBank will give them money. How? Nobody knows where SoftBank's going to get the money. My guess is they're going to borrow it and never pay it back. This is just a few days after the CoreWeave IPO flop. By the way, CoreWeave down about 7.5% yesterday. The AI bubble is popping, guys. They have to blow harder and harder and harder with other people's money to try to keep this bubble inflated, and it's not working. Retail is no longer buying it. People are finally saying what I've been saying for a year and a half, that it's all smoke and mirrors and round-tripping schemes. There is no substance underpinning this entire bubble. You've got chatbots. You've got a technology that is neat, that is useful for some people, but at the end of the day, this is not a multi-trillion-dollar industry, not even close, not in its current form. Maybe it gets there someday, but this bubble will burst long before that day arrives. Also, pay attention. What am I saying here? Tourism stocks. Got an article in Bloomberg this morning. Europeans and Canadians ain't coming to the United States. Look, the trade war being what it is, obviously geopolitical tensions are on the rise among people who were previously allies, or I guess we're still allies. We're just, maybe we're on a break right now, something like, I don't know how that really works. But pay attention, hotel stocks, airline stocks, Disney, theme park names. If tourism in the United States is in decline, you're going to have a lot of stocks that are going to be hurting. Just another data point that says the recession is coming, guys. And last but not least, Hooters has filed for bankruptcy. Some of these jokes write themselves. I'm not going to pick that low-hanging fruit. Look, Hooters, private equity strikes again. When a PE firm comes in and takes a stake in a long-standing business, they strip mine it. They take whatever money they can out of the business, pay themselves dividends. They leave a dying business in bankruptcy behind. rinse, repeat, Red Lobster, Hooters, Joann's Fabrics, on and on. It just keeps going. You can add that name to the graveyard of private equity. We got a lot to talk about this morning. Why don't we shrink my big melon of a head? Let's see what's going on in these markets. Don't forget that like button for the YouTube algorithm and that subscribe button if you're new here. Come on back tomorrow because we do this one every single day. And right now, the S&P is down about 12.5 points, 0.22% lower. Looks like the sell-off continues this morning. The Dow, meanwhile, is down 147 points, about 0.35% lower. And the NASDAQ's doing a little better, off by 48 points, or just about 0.25% in the red this morning. So stocks are down across the board once again. Looking over at the dollar, it's a little bit higher this morning. The DXY is up by 15 basis points, 104.34, but not a lot of movement there. Looking at the bond market, we've got yields are lower across the board this morning. The 30-year Treasury is down by almost 8 basis points, 4.536. We got us a little bit of a flight to safety on the long end of the yield curve this morning. 4.18% for the 10-year. That's down by 6.5 points. The 2-year, meanwhile, 3.887, off by about 2.5 points. And the 1 month is at 4.310, down a fraction of a point, pretty much unchanged here. Looking over at the commodities market, we've got gold is up once again, another all-time high for gold, $3,135. That's up by another $11 or 0.35% higher. Silver, meanwhile, we've got spot silver is actually down about 14 cents here at $33.94. Meanwhile, the May silver contract is up about 11 cents, $34.71. So silver continues to sit out this rally in gold. We've got copper is up by a fraction of a penny here, essentially unchanged. Platinum is down by about 0.9%. Palladium's pretty much unchanged. And WTI crude oil futures for May delivery at 71.62, up by 14 cents. We had oil got a little bit more expensive yesterday on an unexpected inventory drain. The demand story not really playing out the way a lot of people said. The U.S. inventory has been declining a little bit more oil consumption here in the States than expected, and so oil prices rallied a little bit yesterday on that news. Looking over at Bitcoin, it's having a good morning here, up by about $1,100, $83,638 is priced on Coinbase, still below that 200-day moving average. So Bitcoin looking not slightly less terrible this morning than it did yesterday, but still the technicals on Bitcoin are not looking so good here. Now, let's talk about gold here because gold made an all-time high yesterday. It's making another all-time high yesterday. What do we got, like 4 days in a row here? Gold making new all-time highs, 31.34. You know, I was expecting gold to spend a couple of days, maybe even a couple of weeks and months around that 3,000 range, just because it's a big psychological level and you tend to consolidate there for a while. We just blew right through 3,000, guys, and here we are over 3,100. Now, this story yesterday really had me, let me just say it, I was freaking out, all right? And this is the reason why we had to change the title, because it looked like this was a misprint. But the story that broke yesterday was all of a sudden we had this big jump in open interest on the front month contract, these April gold contracts. Now, this is showing the CME data here. The April 2025 contract over here, all of a sudden you had 106,000 contracts worth of open interest. Now, this is on the last day before first notice of delivery, basically 0 days to delivery here. And all of a sudden, you get a 45,420 contract increase in the open interest. It looked like somebody bought a metric crap ton of gold on the last day. And the only reason to do that is to take delivery of it. So the gold bugs were freaking out. Somebody with deep pockets, it's got to be a bank, was buying $13-14 billion worth of gold at the last minute. And then we were going to talk about that this morning. This was going to be the title of the stream. And then we had TF Metals report. Shout out to my buddy Turd Ferguson, who posted this one today, who says Monday's preliminary open interest report seems to show that the surge in open contracts on Friday was indeed an error. Could there be other shenanigans going on behind the scenes? Of course, but the most likely explanation for the extremely unusual jump in open interest is a data error by the CME. And he's showing a screenshot of the updated data showing now a decline of 87,800 contracts in the April delivery contract here. So whatever happened, was it a misprint or was there a big cash deal that was cut behind the scenes that we don't know about? I don't know. but we had a big surge in open interest in gold contracts. It looks like somebody was draining a ton of metal off the COMEX. And then a day later, nope, never mind, minus 87,000. So that's why we had to pivot at the last minute and change the title of the stream this morning. Shout out to Mish, who caught this like 3 minutes before we went live. I had 3 minutes to totally replan the show. That was fun. Thank you, Mish, for catching that one. Good job, brother. Also going on this morning, let's talk about these auto stories because we do have a lot to talk about in the car market here. Trump tariffs jolt Asian automakers. Toyota likely set for the most pain. Toyota is the #1 selling make in the United States, and they are made mostly not in the United States. Newly announced U.S. tariffs on auto imports have rattled Asian automakers, pressuring companies ahead of the implementation of the duties later in the week. U.S. President Donald Trump Wednesday announced sweeping 25% tariffs on cars not made in the U.S., sending shockwaves through global automakers. Shares of Toyota fell 9.4% in 3 sessions following the announcement, while Nissan dropped 9.3%. South Korea's Hyundai lost 11.2%. Japanese car makers are particularly in dire straits, with Toyota likely to be the worst hit due to its huge U.S. sales, according to Vivek Vaidya, global client leader for mobility at research firm Frost & Sullivan. According to U.S. car marketplace CarPro, Asian automakers made up 6 of the top 8 automakers in the U.S. by sales volume in 2024. Toyota took the top spot with 1.98 million vehicles sold during the year, beating domestic heavyweights Ford and Chevy. Japan's Honda and Nissan were 4th and 5th places respectively, while South Korean brands Hyundai and Kia took the next 2 spots. Subaru came in 8th. So you got 6 of the top 8 selling brands in the United States are Japanese or Korean, and now they're going to get 25% more expensive. You better believe the car numbers and the CPI are going to jump like crazy in the next few months. The company's most recent financial statements reveal that they generate a major chunk of their revenue from North America, which means that any tariff impact is unlikely to be easily compensated. So heads up, guys, if you're invested in any of these names, there is fireworks on the horizon here. Meanwhile, in China, you got the opposite. BYD enjoys yet another blockbuster quarter as Tesla flounders. China's BYD enjoyed a strong start to 2025 with sales up 58% in the first quarter versus the same period of last year. Guys, take that in for a minute there. 58% year-over-year jump in first quarter sales. It's not just a good year. These guys are growing like the blob is growing right now. The nation's best-selling auto brand delivered 371,419 passenger vehicles in March, bringing the total for the first 3 months of the year to 986,098 units. Data released Tuesday shows. Of those, 416,388 were pure electric vehicles, so a little less than half of these are electric. Most of them are hybrids. BYD stopped making internal combustion engine cars in 2022 and now produces EVs and hybrids only. The numbers will likely be in stark contrast with U.S. rival Tesla, which only makes EVs and whose first quarter sales may be as low as 340,000, according to some analyst estimates, or possibly around 377,000 mark. Now, this is interesting here. First thing I got to say is note the subtle change in the language that Bloomberg uses. After years and years of the best possible phrasing of words, best economy ever, lipstick on all the pigs, right? Everything was great. If there's any bad economic data, it's just because of your bad vibes. Now, all of a sudden, Bloomberg leads with the low number, as low as 340,000. Since when does Bloomberg lead with the low case? Notice the subtle change in the attitude in the financial press. Gee, I wonder what changed versus a year ago. But besides that, guys, and even that notwithstanding, Tesla's in bad shape here, all right? And BYD eating their lunch in China. And it's not just China where Tesla has problems. We got this one this morning. Tesla sales fall by nearly 40% in France in March. Wall Street still expects deliveries to improve this quarter. Once again, you've got a rounding up at Market Watch. It was actually 37%. They're rounding up to 40 here. Since when does the financial press make things sound worse? It's almost like something just changed in the last year, but I digress. Tesla sales tumbled for a 3rd straight month in France, according to data released a day ahead of the electric vehicle maker's quarterly report on deliveries. The French trade association PFA reported sales for Tesla fell 37% in March and are down 41% this year. French vehicle sales tumbled 15% in March and are down 8% for the year. So those two sentences there, you've got a backdrop of a French vehicle market that is in decline, right? 15% decline in March, 8% for the year. But within that number, within a declining market, Tesla's numbers are much worse. 37% in March, 41% for the year. Now, it's also worth pointing out, I went back and checked, Tesla's sales in France were down 26% in February. So this is accelerating as we go. This was not just a one-off post-election. This is getting worse. It's gaining momentum. The news was similar in Sweden, where Tesla sales plunged 64% in March. CEO Elon Musk's political backing for President Trump, as well as right-wing parties in Europe, has alienated buyers, while the company also has been impacted by the launch of a new version of its Model Y. They are retooling the production line of the Model Y. Whenever you do that, you have a slowdown in deliveries. So maybe that's partially contributing here. But that change to the Model Y doesn't explain a 64% decline in Sweden and 37% in France. Guys, Tesla, I mean, I hate to keep revisiting this, but look, here's another picture. There's blue paint splattered all over the dealership. I mean, it's like fashionably en vogue to just go commit arson and vandalism at Tesla dealerships right now. I mean, they're blowing them up. I mean, there's videos of these things being spit on, being keyed, being firebombed. This is dead money, guys. I've said it several times. Tesla right now, $263.67 pre-market. It's actually up a couple of bucks ahead of the open, 1.7% higher. So they got that going for them. Meanwhile, OpenAI is now worth more than Chevron after a SoftBank funding round. This story is the eye roll of the day. SoftBank seeking co-investors for a quarter of its $40 billion funding of OpenAI. The company at the heart of the AI revolution, OpenAI, just raised money at a $300 billion valuation as the publicly traded AI stocks advanced on Tuesday. OpenAI, in a blog post, said it raised $40 billion from Japan's SoftBank that values the ChatGPT maker at $300 billion. It comes as the company is unveiling new and more powerful models. Yeah, I saw that you can rip off Japanese anime animators now by having your profile picture converted to a cartoon. Oh my God, we're all going to lose our jobs. Apparently, that's the big breakthrough with the new, more powerful model at OpenAI. Today, we're announcing new funding, $40 billion at a $300 billion post-money valuation, which enables us to push the frontiers of AI research even further, scale our compute infrastructure, and deliver increasingly powerful tools for the 500 million people who use ChatGPT every week, the company said in the blog post. What the company didn't say is we need this $40 billion to survive for another year because we burn money like crazy. And they didn't mention that in the blog post, but they needed it. This was a lifeline. The valuation puts OpenAI ahead of oil giant Chevron, which has a market cap of $293 billion. Last year, OpenAI estimated it would lose $5 billion on revenue of $3.7 billion, according to the New York Times and CNBC. These guys are so far from profitable, it's a joke. Meanwhile, Chevron earned $18 billion in profit on revenue of $203 billion, but OpenAI is worth more, sure. Granted, Chevron is a slow-growing company in a sector that most say is headed for a decline, and OpenAI is rapidly growing, albeit unprofitably, in what could be a vital sector in the future. OpenAI is growing. We lose money on every single prompt that gets used in our tools, but don't worry, we make up for it in volume. Okay, apparently that works somehow. SoftBank has already invested $2.2 billion in OpenAI, in which Microsoft has a minority stake. SoftBank, meanwhile, said it plans to syndicate out $10 billion of the investment to co-investors. The first $10 billion investment is planned for mid-April, with the rest coming in December, SoftBank said. It's going to borrow from banks, including Mizuho, to finance the initial disbursement because SoftBank doesn't have the money. I keep saying that. Like, SoftBank just said, we're going to spend $1 trillion on technology parks. They're just making up numbers. They don't have it. SoftBank is going hopelessly in debt. And guys, keep in mind, almost a half of SoftBank's valuation is their 90% stake in ARM Holdings that they can't possibly sell without crashing the price of ARM stock. SoftBank, they're blowing harder and harder. Sam Altman blowing harder and harder into this bubble. Keep blowing Jensen. Keep blowing everybody because it ain't working. This thing's losing air fast, and it's going to pop sooner or later. And just remember, guys, nobody saw this coming. Meanwhile, European tourists start avoiding the U.S. as unknown territory. We got this one in Bloomberg. Pay attention if you own any tourism stocks. French hotel group Accor SA has warned that forward bookings from Europe to the U.S. are down 25% this summer as travelers that feel put off by U.S. President Donald Trump's crackdown on immigration divert to other locations. I don't think it's so much immigration as much as it is the trade war, but I could be wrong about that. The company is seeing a pretty strong deceleration across the Atlantic, said CEO Sebastian Bazin on Tuesday in a Bloomberg TV interview. The drop is an acceleration from an 18 to 20% decline in the first 90 days of the year. Travelers are deciding to visit places such as Canada, South America, and Egypt instead of the U.S., Bazin said. It's probably anxiety to go in an unknown territory. Really, Bazin said. While cases of people being detained at the border are anecdotal for now, they have nevertheless created a bad buzz that's starting to show up in booking trends. I don't know many French tourists who cross the Rio Grande with a gallon of water in a backpack, but they're making it sound like it's immigration that's driving this. It's not immigration, guys. It's the trade war. I mean, this is just take whatever issue you want to blast Mr. Orange with and then slap a story on top of it and say, because this is the trade war. While European airline executives said last week there was no change in demand for now across the North Atlantic corridor, Virgin Atlantic Airways sounded the alarm this week about a recent weakening of travel to the UK. That caused shares of transatlantic carriers such as British Airways parent IAG to slide. On Monday, Air Canada said bookings for transborder flights between Canada and U.S. cities were down 10% for the April to September period as Canadians respond to a brewing trade war by avoiding trips south. Look, I'm sure international tourism is going to take a big hit from this trade war. So just be careful if you're in any of those names. So we got automakers, we got tourism names, we got Tesla all getting clobbered over geopolitics. And we got this one going on in India across the pond here. Vodafone Idea shares soar as India converts dues into equity. Guys, this is a bailout. That's what this is. You've got the largest cell phone carrier in India is getting bailed out by the Indian government. Shares of Vodafone surged on Tuesday after the wireless carrier said the Indian government would convert 369.5 billion rupees, it's about $4.3 billion US, worth of its dues for airwaves into equity. So this is interesting here. Vodafone owes the government in India $4.3 billion. This is how they pay for their bandwidth, which is what all the cell signals travel on. Well, instead of paying their dues, the Indian government is becoming a shareholder in the company. They're diluting their shareholders to pay their bills, and the government is buying. This is a bailout. This is no different than government motors, right? When the government took a big stake in GM, it's the same thing going on here. Now, the stock jumped as much as 26%, the most since September of 2021, before pairing some of the advance. The government's ownership in the company will increase to 49% from 22.6% after the issuance by the debt-laden firm. We see this equity dilution as a bandage, said Macquarie Group analyst Aditya Suresh, and Baiju Joshi wrote in a note. With the cash flow inadequate to pay back obligations as per timelines, they see significant additional equity dilution risks for minority shareholders. So you got the biggest wireless carrier in India is at risk of going bankrupt. I mean, that would be like an AT&T or a Verizon at risk of going bankrupt here in the States. That kind of belies some underlying weakness in the Indian economy, right? If you were seeing Verizon go into deep debt, having to get a government bailout, it would probably mean people aren't paying their cell phone bills or maybe sales are way down. So keep an eye on what's going on in India. We were just talking 2 weeks ago about how the Indian central bank had to bail out their banks by intervening in the rupee market, trying to prop up the value of the Indian currency, which has been a free fall. So keep an eye on this one. It is the world's fastest growing economy. And one more before we wrap up the show here. Restaurant chain Hooters files for bankruptcy to enable a founder-led buyout. We're not going to spend too much time on this one, guys, but this is another case of when you get into bed with private equity, this is what happens. Your business goes bankrupt. We had a private equity firm came in, they bought a controlling interest in Hooters, and a few years later, the company is going bankrupt, and now the founders and a bunch of the franchisees are trying to buy the company back from this private equity slop house in order to save the business. That's what's going on there. I guess we won't make any booby jokes today. Might as well leave that one alone. It's April 1st. There's enough crap on the internet today. So we'll cut it there. I just want to say thank you very much to Mr. Armando Reyes. Trump 2028 US. I'm afraid you lost me with that one, Armando. I am not a proponent of a third term. Yeah, I get the Roosevelt thing. We've done it before. I voted for the guy. I didn't want the guy to be on the ticket, to be honest with you. I was kind of hoping for somebody else on the Republican ticket. But you know what? I'm a libertarian, which means I vote for losers in primaries. That's what happens every time. But a third term, it's got to be a no for me, dog. Sorry, not a big fan of that idea. Although I'm not sure how serious he is and how much of it is just trolling the press. Just say something so outlandishly ridiculous so they focus on that and ignore policy. Maybe that's what's going on. Or maybe it's another, maybe he's serious. I don't know. It's really hard. Certainty waved bye-bye to Washington, D.C. a couple of months ago. So it's really hard to tell. Thank you very much, though, Armando, for supporting the channel. Thank you, Raiden57, who says Hudson Bay Company as well filed for bankruptcy. Really? HBC, that's, God, yeah, been around since the 1600s. I was going to say, what was that show with Khal Drogo was in it? Jason Momoa. I mean, Hudson Bay Company was the big bad in that one. They go back to like pre-revolutionary era, 1600s. Wow, that's the first I've heard of HBC going bankrupt. Thank you for that one, Raiden. I'm sure the name is going to survive. Somebody will probably buy the brand, but wow. Geez, a freaking 425-year-old company going belly up. It's the 2020s, folks. Nothing is safe. Thank you very much, Raiden, for that tip. I appreciate that, sir. And thank you to Atomic Coyote. Any thoughts on the weird spike in the 3 and 6 month yield last night? Very astute. You caught that one. Twitter speculation that Japan banks sold to raise money at the end of the fiscal year. Look, it happened last night. Let's just say yesterday was one of those weird moments in the market. The end of the quarter, the end of the fiscal year in Japan. We also had a big spike in reverse repo yesterday. End of the quarter, it's expected, although the spike was a little bigger than I would expect. And then it was yesterday, I saw it, I think it was around 7 or 8 p.m. Eastern time last night. The 3-month and the 6-month treasury spiked like 60 and 50 basis points respectively. I am 99.9% sure that was a misprint, because how would you see the 3 and the 6 spike 50, 60 basis points without the 1 moving, without the 4 moving, without the 1 year moving? So I'm pretty sure it was a misprint. Now, it was a misprint that was timed at a very tight moment for liquidity, the end of the quarter, when historically there have been fireworks, right? Like the Repo Madness event in 2019 happened at the end of the third quarter. So the timing is highly suspicious, but I'm almost entirely convinced it was a misprint. We've seen these glitches before. To see it in 2 different treasuries, none of the other ones that surround it in duration, though, I think it was probably fake. But very good observation, because that came and went real fast last night. Thank you, Atomic Coyote, for supporting the channel, sir. Also, that doesn't mean the Japanese banks aren't in trouble, because I think Norinchukin in particular is in a lot of trouble. Whatever problems they've had, they've only gotten worse by the commercial real estate bubble here in the U.S. Thanks again, Atomic Coyote. And thank you, Dean, the double D. He says, we got to talk about Newsmax stock. Excuse me. It's on fire and has a high dividend. I didn't know about the dividend. Opened at 10 to 14 and now $100 in less than a day. Yeah, Newsmax IPO'd yesterday and it rallied like over 400% at one point. I didn't watch it that closely. I didn't know anything about the dividend. It's weird to see a stock IPO paying a dividend. But take everything that went wrong with the CoreWeave IPO, Newsmax did it right. And I guess I'm not terribly surprised that you don't hear a lot about that in the mainstream press, because the mainstream press does tend to lean almost universally one direction, and it ain't the direction Newsmax leans in. And, well, Newsmax IPO going very, very well. There's a little bit of egg on their faces. So I'm not surprised you don't hear a lot about it. I haven't studied it that closely, but I did catch the surge yesterday. Now, the IPO, I don't think it was anywhere near the size of the IPO of the CoreWeave one. Maybe that explains why it didn't get as much attention. But I think that's a story that the rest of the market would kind of rather they just pretend it didn't happen. That's just my very unrefined take on what happened with Newsmax. And he's also saying we missed out on getting rich quick with Newsmax. Hey, hindsight is 2020, Dean, right? Unfortunately, you can't go back and do it over. No way of telling Newsmax is going to spike several 100% on its IPO day. So, yeah, we missed that one, but there's always another stock. There's always another investment. There's always something somewhere that's going up while everything else is going down. Thanks again, Dean, for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Shout out to my magnanimous Melonheads on Patreon and YouTube. Thank you guys for supporting the channel. You guys rock. Links down below should you feel so inclined. Thank you also very much for the super chats and for the support of the channel. Don't forget that like button and that subscribe button on the way out for the algo. Hi, Mom. Hi, Dad. I love you guys. Everybody else. Till next time, live small and dream big.